Hey, if you're an investor and you struggle with wasting time and money by choosing the wrong stocks, then you need to get my latest ebook called Wall Street Secret Weapon. It'll set you up to take the shortcut to financial independence. Just go to wallstreetsecretweapon.com, download the free ebook today, and then take the free masterclass. You have literally nothing to lose and the shortcut to financial independence to gain. So go to wallstreetsecretweapon.com to download your free ebook and take the masterclass starting right now. Hey there, 10-minute traders. I am so excited to have my friend Steve Burns back on the line today, and we're going to be talking about the ultimate trading risk management guide, Steve's most recent and potentially his last book. Steve, thank you so much for coming on the show today. This is the How to Trade Stocks and Options podcast, brought to you by 10minutestocktrader.com, where we give you the tools, tips, and tricks to help you trade faster and trade smarter. And here's your host, voted one of the top 100 people in finance by Redwood Media Group, founder and head trader of 10minutestocktrader.com, Christopher Uhl.
Hey, Chris. Great having me again.
Steve, I think it's actually been 6 months. I was just looking at our Skype conversation here, and it said 6 months has gone by, and I was like, oh my gosh, I can't believe 6 months. I need to find an excuse to get Steve back on the show.
It's amazing how fast time went by, and I think I'd written that risk management book about a year ago and launched it, so it's amazing how time flies.
Really? Yeah, I couldn't agree more. I was just telling Steve that just a few days ago, I was putting my son to bed, and I was going through the Kindle Unlimited, and I saw several of his books in there. And if you guys don't have Kindle Unlimited, you can actually get it. I think it's like $10 a month, and you get access to a huge library of not just trading books, but books of all kinds of topics. And Steve has many, many books in there. So if you want to get in and check out what Steve's got available just to read for free, pretty much, go and check that out. But this book that we're going to cover today, the Ultimate Trading Risk Management Guide. I need a risk management guide on how to speak correctly. That is not included in Amazon Unlimited right now, for at least. I'm excited to have Steve on and talk about this.
Yeah, I'm so glad to be here. My favorite subject, the math of trading.
Yes, and really, I don't remember where I heard it from, but there's really only two ways to make money trading. Your losses have to be smaller than your wins, or your losses have to be significantly less in number than your wins. Something like the Walmart effect, where you're selling everything for a really low price, but you're also not losing much, but you've got a huge volume, versus like hitting singles with every trade where it's greater than your losses. So that's at least how I kind of conceptualize it.
Yeah, it's like either a high profit margin with a small amount of sales, or a low profit margin with a lot of sales.
Yeah, that makes total sense.
The risk reward is almost tied together. If you win, $500 for every $100 that you lose, then you only need a 17% win rate to be profitable. If you win $300 for every $100 you lose, you only need a 25% win rate to be profitable. And the closer your size that your losses and your wins are, the higher your win rate has to be.
Yes, and just right there, you made me think about something that I kind of changed a lot. Is I actually don't go into my broker platform except if I'm going to execute a trade. I remember there was a time where like the only thing I did was 8 times a day. Oh, what's going on over here real quick? Let me see. How much am I up? How much am I down? But now I've gotten to the point, and I'm sure that you have as well, that, it's not about the money. It's about, am I trading correctly? And I don't have to go into my brokerage platform to even see that. And in fact, I think that going in and looking at if you're up or down can actually be detrimental.
Yeah, I agree completely. The more screen time you have, and the more you mull over your trades, and the more emotional and mental and ego exposure you get to your trading, usually the worse it is for most people. Even day traders, the ones that I know that have been successful, only usually trade the open or the close and expose themselves for a few hours a day. Especially if you're a swing trader or a trend trader and you're looking at the ticking of the prices all day long, it's just a waste of time and energy.
It really is, and energy especially, because you can get high on, oh, I'm up today, and then you come back later and you're like, what the hell happened, right?
Yeah, I'm like you. I just focus in on my signals and my trade time execution, and I focus on that. I'll check in a few times a day. I'll see how it opens, see how we close, see how we are around lunchtime. Checking occasionally, but that's just not how I've made money. Is sitting and watching the ticks of
Mm-hmm.
the market all day long. I think it's a code says it's like having a slot machine on your desk. You're watching prices all day long.
You know, you turned me on to the TrendSpider platform, and I love the TrendSpider platform now. I mean, that's if I'm going to go and look at anything, that's where I go to. And for the fact that you can backtest anything right on the screen, that is so cool.
Yeah, that's incredible how they put together. I used to have to use charting and backtesting, and now I can go to one place and do both simultaneously.
Yeah, you can just click a button. And my favorite thing, and I don't know if you've tried this, is like after you've done the back test, you can hit the show on chart. And if the
Yeah,
signal is valid right now, it'll actually put like a blue cloud on where the stock price would be going if that signal held true. And man, I love that. That is so handy.
yeah. Jake and Dan at TrendSpot are amazing. It's incredible what they built for us to have nowadays. They used to be a professional level type of platform, and you have to have some type of back testing to go with your charting to see how your signals worked in the past and how much risk you're exposed to. People just have opinions of what they think will work. Can they quantify it? And if they can quantify it, go see what happened with that signal and pattern over the last 20, 25 years.
Hmm. And the reason I bring up TrendSpider is because whenever I am putting on trades and talking about moving average crossovers or MACD crossovers or whatever is your signal, you can actually get an alert from TrendSpider like texted to you. So you can be out doing anything in the world and you get a text on your phone and say, oh, my signal to enter or my signal to exit just hit. Let me go execute it real quick. And that has been a huge, huge game changer for me because now I don't even have to look at the charts, right? I just wait till
Yeah.
I get a text and then I can go and do it.
Yeah, if you do intraday signal trading, having a signal and being signaled saves you the emotional and mental stress and the exposure of screen time, which could lead to error, especially new traders. The more screen time they have, the more they watch trades, the more the odds go up that they're going to make an error.
Oh, absolutely. Absolutely. And in fact, if you guys out in the audience are interested in getting TrendSpider, I have a coupon code for you. And you can actually get a bunch of extra bonuses too, totaling, I think it's over $100 at this point. If you go to trendspider.10minutestocktrader.com, just go there. You can see the bonuses. And if you decide to get TrendSpider, you can get it for free for a week. And I think you can even sweet talk them into a few extra days if you really want to. But you can get 15% off by going to trendspider.10minutestocktrader.com. So I just had to plug that real quick since we were talking about them.
Well, I can completely support that platform. I completely agree with you, Chris.
Yeah. All right. So back to the ultimate trading risk management guide. We got off topic there, Steve. Um, in this book, and really, let me see if I can find it real quick. It was in the first chapter. Maybe it was in the preface. It was by Paul Tudor Jones, an introduction, right? You always want to be in control, never wishing, always trading, and always first and foremost protecting your ass. That's why most people lose money as individual investors or traders, because they're not focusing on losing money. They need to focus on the money that they have at risk and how much capital is at risk in any single investment they have. If everyone spent 90% of their time on that, not 90% of the time on pie in the sky ideas, how much money they're going to make, then they would be incredibly successful investors. And that was from Paul Tudor Jones. And that's the introduction of Steve's book here. I couldn't agree more with that, Steve. And then when I was reading that, my first thought was I had Mark Minervini on the podcast, which was a huge, huge honor to have him on. And that was another one of his secrets to success too. Is you know what? If I'm wrong, I'm wrong. I'm cutting it. I'm not doing anything with it. There's no point in sitting and holding and wishing and hoping, Steve.
It's so funny that so many new traders, how much money can I make? How much money can I make? It's almost like a sports team. Just how many points can I score? How many points can I score? Well, you have to stop the other team also from scoring points. And risk management is how you don't give your money to other traders and other participants in the market. You have to be defensive and not let other people score against you while you're trying to score points yourself. That's what it's amazing. There's so many people who just think that trading is a simple, consistent thing where you just make money all the time, nonstop, and you can trade as big as you want to and scale as big as you want to. And if you're really good, you just always make money. And that's the complete opposite. there's different win percentages for every trading system and every trader, and there are losses. Even Renaissance Technologies has occasional losses with Jim Simmons.
Steve, listen, I heard on the internet that there's just one simple line pattern that I have to follow, and it is going to guarantee a win every single time. Are you saying that that's not correct?
Yeah. Somebody who tells you how easy money is to be made, they should be out making that easy money, not telling you about it if it's that easy.
Right. In this book, Steve, one of the well, actually, something pretty cool with Kindle. I don't know if you picked up on this. Is that if there's a section where more people have highlighted it or underlined it, it actually kind of like dotted line underlines it for you. So hey, other people think this is important. And one of those sections here is in your first chapter. The biggest mistake you can make in risk management is finding yourself on the wrong side of a trend with a large position size, stubbornly letting it continue to run against you without exiting. If you don't know what to do in a market, the safest thing to do is go to cash. Steve, listen, I've been there. I've done that. That's how I lost all that money in gold. It's because I saw the trend going down, but like I said, I knew better. I knew that gold was going to turn around. Gold is going down, but when I got in, that was gold's signal to turn around. But I don't know what went wrong there, Steve.
Yeah, sometimes the egos can cause big losses.
Yeah, you got that right.
And sometimes not, psychologically harder to take a loss than it is psychologically enjoyable to take a win. So, usually, and every trader goes through this, where you have a loss, maybe a big loss, and then the normal human instinct is to, well, I'll wait for it to get back to even and I'll get out even. I can't lock this in. It's too big. I'm already down too much. And then that's how you get on the wrong side of a trend and just have your head taken off. So that's just a normal, absolute, everybody's been there.
Yeah, and really, trading itself is not per se difficult, right? You're just clicking buttons, right? It's not like you got to dig a ditch for 63 hours. I mean, you're just clicking buttons here. But it's not that part that's the hard part. It's the game that goes on in your head, right? Do I take this small win? In fact, I texted my brother-in-law not too long ago. He's really interested in trading and wants to learn and be a part of the company that we're building over here. And I was like, you know what the hardest part about trading is letting your profits run and cutting your losers short. I was like, it doesn't sound like it's hard. But if you're the person and you have to make that decision on a day-to-day basis, it's way harder than anybody who doesn't actually trade knows about, right? Getting that low profit, like, oh, I'm going to take those profits while I can. And then like you were saying, the instinct is let your losers run. And eventually, hopefully, they'll come back. It's what you're hoping for.
And the other side of that is how good it feels to take a win. People love to take small wins. It feels good to lock a win in. It feels uncomfortable to have money on the table and letting it run, to your favor. It's odd that psychologically both of the things are difficult.
Yeah, it seems counterintuitive. It seems like you'd want to get rid of something as fast as possible that's not working and then hold on to something that is working. But that's just not the case. I am not smart enough to know what's going on inside the human brain, but I do know that affects me and you and everyone else out there, and it's so interesting.
And I hope that's an edited cough.
There will be no editing on this one, Steve.
Yeah, that's the biggest thing. Once you've trained yourself to let winners run and cut losses short, you get yourself where that's your habit. You instantly don't like losing money and you want to get out as soon as possible, but you like making money and you want to stay in as something goes in your favor. Once you can train yourself to that, that's a huge part of the battle.
Oh, yeah, without a doubt. And, I'm going to skip all the way to chapter 13. One thing that Steve says here, and he said it on his social media to the point where it's like it should be ingrained on anybody who follows Steve. And this right here was one of the key things that made me question my trading years ago whenever I first saw him posting it, is every trade should end in either a big win, a small loss, or break even. And the first time I read that, I was like, yeah, whatever, Steve, and kept scrolling. But then I got to think more about it, and I was like, you know what? He's got a really, really good point, right? Those are your four outcomes. If you can just mentally get to like, these are the only options for the exit, a big win, a small loss, or break even, I think that's half the battle right there. Don't even let the concept of a big loss enter your realm.
Yeah, you can have a lot of little losses, but one big loss can cost you a lot of money, and that also skews your risk reward ratio against you. If you can create a good risk reward ratio, you will make money if your winning percent is conducive of that risk reward ratio winning. And you can't control exactly how that'll be. You can control your stop loss for how small the losses will be, but you can't control how big your winners will be unless you lock in small profits. But big losses cause big drawdowns and skew your risk reward ratio, and that's the main causes of not being profitable is big losses. You get rid of big losses, you increase your odds of profitability dramatically.
Yeah, and really that's it. You remove just the one side of the balance sheet, right? You're skewing everything to the positive side, and like if it were a bell curve, you just have a little tiny bit on the left hand losing side, and you've got a little tiny bit on the closing on next to zero, and then you just let as many as you can go out to the far right hand side. Um, there actually, gosh, there was something I was gonna. I was thinking about this not long ago because there was a day where I did not trade my plan, Steve, and I kind of felt bad about it. And I went to bed and I was tossing and turning that night, and I was like, I'm not upset about the money. I'm upset about the fact that I had a plan and I didn't execute the plan. That's what more upset me than the money. And if I had followed my plan, I wouldn't have even had to worry about the money because there would have been a big win, a big loss, or small win, small
Yeah.
loss, or break even.
Yeah, that's the other thing that the psychology bleeds into the risk management, where you will actually your lack of discipline can cause big losses if you don't trade your right position size. You go too big because you get greedy, then you could have a big loss. Or if you have the right position size, but your stop loss is hit, you don't go out and you let it keep going against you, cause a big loss. But the psychology can bleed in with a lack of discipline and hurt your risk management and cause you to be unprofitable because you do have a system with an edge, but you don't have the discipline to follow that system with edge. Like you said, it's another form of education to develop the discipline to stick with. You can trade any way you want to. When the market is closed, you decide how you want to trade. You decide what gives you an edge, how you'll create a winning system, and then when the market opens, you have to actually trade what you've decided to do. It's funny how there can be the trader trading and then the analyst with the trading planner feel like they're two different people.
Yeah. You know what I've been doing more, and it may be something similar to what you do, is at the end of the day, after the market's closed, I look at what positions I have on. I also look at what positions I'm interested in putting on. And then I make my plan right there, right? So I'm in Central Time. So at like 3:30, I'm looking, I'm making my notes, and then that's my notes for the next day. And that makes me feel very secure, very content because I know what my plan is going into and going out of the trades that I have put on. I'm not guessing ahead of time. I'm actually writing it down physically, pen to paper. Is that something you do?
I used to for years and years and years. A lot of the systems that I follow and signals and stop loss trail stops are so ingrained in me now because I've worked on my strategies for decades, and I'm at a place now where it's mechanical. It's not even like, I mean, losses can still sting if you're losing money. I'm trying to make money, not to lose money, and you can't get rid of your emotions. You still feel the emotions, but they're filtered through the discipline of your system, and you understand the dynamics. Every time Tom Brady doesn't have a completion, he isn't devastated. He doesn't like it, but he goes on to his playbook and does the next play. He knows he's a Super Bowl quarterback, and he goes on to the next play. And that's a big part of even sports psychology, is executing without being overwhelmed by emotions that cause you to make errors where you go on tilt and you start, trying to make money back and trying to trade too big, going on tilt like in poker when you have losing hands, and breaking your strategy is what costs you in every sport and every even a professional gamblers. You have
Mm-hmm.
to stay level headed and just execute what you know is right.
You know, that made me think of Dr. Steenbarger. I am so fortunate and feel so blessed that I can actually speak to people like you and him, real celebrities out in the financial world. Uh, One thing that he mentioned was, if you're going to come to the table and try and make money as a trader, good is not good enough, right? LeBron James didn't become LeBron James by being good. He became LeBron James by being incredible, by being excellent, by always consistently practicing, improving, becoming the top athlete he could. And he said, traders need that mindset too. I'm not going to take a mediocre trade. I'm going to take the best trade I possibly can because it fits my risk return profile here. And you have to be flexible in the. Oh, I heard this in what book was it? Trading for a Living by Dr. Alexander Elder. He says something like, be strict on your plan or strict in your signals, but flexible in the outcome. So you got to be strict in getting your fundamentals down. You got to be strict in knowing what you're going to do, but you got to be flexible on what's going to happen because you can hope for the best, you can plan for the best, but it doesn't always work out that way.
Yeah, you even have an expectancy of what your what's going to happen. Like a great baseball batter. If he's batting .333, is outstanding, but he's still going to strike out 2 out of 3 times. He knows he goes up there and he has 3 losses in a row, and he realizes he could very well have another hit, but he's not. He's got his right stance. He's batting. He's swinging at what the strike zone of the balls are. And he's a professional baseball player. He's not, he's not devastated, and he's a professional, and he's executing his process. But like you said, though, he has to have a process and be a professional. He can't be up there, mediocre, because he'll be sent back down to the minor leagues. He has to know in the past he's able to hit 1 out of 3 balls, and he's going to, have his $1 million contract in place. So I think that's a good point. Like saying you can't just be good and make money trading. You have to be a professional. You have to approach it as a professional endeavor with a business plan, trading plan, an edge, a strategy, back testing, reasoning why your system or strategy will work over the long term and make you money and what you expect to make on average, and by month and by year. Like you said, you have to quantify all that.
Yeah, absolutely. So speaking of quantifying, I was looking at the charts of the SPY. Right. We are, everybody's coming into the market and they're like, oh, I got to do something today. I got to move. And in your book, you talk about how cash is a position. And I bring this up because like let's say somebody wanted to start trading today and you see the S&P at 308 and like hasn't had a down day really in, I don't know, 2 months from like mid-October. What would somebody do at this point, right? Because everything feels so, to me, so overbought. We've got the RSI like hovering at 70, which I know is a big indicator for you. What would somebody do coming into this situation, right? Where are they looking to go? Would you say, sit on your hands, now's a good time for cash? Or would you say something like, well, maybe you could look at gold or bonds, some sort of defensive play if the market does go down? To me, right, it's like, I would rather just sit back and let things happen, put my hands in my pocket, and not really participate because I don't feel super comfortable at these levels. What about you, Steve?
Yeah, well, I can tell you what I actually did on this. In my on my private group, what we did. The SPY, I bought the SPY when the 10 crossed over the 50-day EMA. And then I held it until the first time it hit the 70 RSI, which was about 5 days ago. So I bought the crossover of the 1050 EMA crossover because it backtests well. If you use that signal in backtesting, it does make a lot of money long term. And the 70 RSI tends to be where you find short-term tops 8 or 9 or 10 times. 70 RSI will mark even the short-term top in an uptrend. So that is what my trade was, buying the 1050 EMA crossover and selling at the first time it hit the 70 RSI and rejected 5 days ago. So I didn't catch the last couple of days higher, but I didn't also put my capital at risk of those days that it did reverse at these high levels. And I also had a trade with the SSO and the same signal off of that chart, the double leverage SPY for more alpha. I bought that chart's 1050 crossover the next day and had that trade up to it hit the 70 RSI. So those were my actual trades based on mechanical crossover entry signals and exits when I thought the risk-reward ratio had skewed against my trade.
Perfect. So what Steve is getting at there is, you've got to find the right risk-reward balance, right? Because right now, like Steve was saying, the balance is more risk than it is reward. And that kind of jives with what I was thinking as well. So interesting to hear that from you, because I know a lot of people, they're like, hey, I'm buying breakouts. I know that's Mark Minervini's strategies, is buying breakouts and watching it go to 3, 4, 5, 10 times returns. But he's a super performer for a reason. And I definitely, if I had to put money on it, I don't think he's looking to buy at this particular top either.
Yeah, I think a lot of Minervini is a classic stock trading off of breakouts, going back to the Cam Slim method and William J. O'Neill, even Nicholas Darvis and Jesse Livermore. A lot of the classic breakouts, they were based on price bases of patterns, in the initial break out of a long-term resistance versus chasing after it's already been running up for a month. Completely different risk reward dynamics.
Absolutely, absolutely. Yeah, chasing price is a dangerous game to be chasing after.
It's so funny that most traders they'll see a breakout, they don't want to buy it because they feel like, well, this is too high. It's the first or second time it breaks out of a high over range. It looks like it's too high, but then when it starts trending, going higher, then by the time they feel, okay, I think it's going to trend, then it's too late because it's already overbought and it's already ran for too long, and then they tend to buy too late and not trust the initial breakout. So yeah, that's funny, the psychology of that as well.
Yeah. So Steve, one of these chapters that I saw, I thought was very, very important. And I think that the audience out there really should, if they haven't already thought about this, take a step back. And chapter 11 of your book here says, never risk your lifestyle. Now, for me, I have multiple accounts. I don't even know how many accounts I have, too many to count. But I'm only trading, like actively trading, putting things on, taking things off in one account. That's my trading account. Other stuff is, long-term investment. And I'm not looking at it. I'm not touching it. I'm not opening it. I'm feeding it every 2 weeks on a payroll schedule. And that's it. And, I couldn't agree more. And I think that this is where a lot of people really, really, really screw up is they're like, oh, my IRA's got $50,000 in it or whatever. Let me go and start trading with that. And before you know it, your IRA is not as strong and healthy as it used to be.
Yeah, and it's all about goals. What someone's goals are. There are systems. I think we talked about before we went on this call about, there's different ways to make money. Warren Buffett makes money by fundamental signals and buying companies that he thinks are so good he could hold the rest of his life. While Paul Tudor Jones is a trader who trades, futures contracts and trades the moves and trends and he uses futures and options. And, Paul Tudor Jones, they're both billionaires. Then there's so many ways to trade and make money in the stock market. And as long as you have a repeatable, valid system, whether you are a value investor or whether you're a trend follower or whether you're a swing trader, if you have an edge, you will make money. There's nothing wrong with Warren Buffett. Warren Buffett himself says one of the best strategies for most people is buy the S&P 500, for a 30-year trade. 30 years from now, the odds are the index will change the stocks and they'll be higher because they'll be all the leaders. The S&P 500 is a system itself. And it has risk management itself because it takes out losers and puts in winners. So that is a valid strategy to buy the SP 500 and hold it for 30 years. It just depends on your own psychology and makeup. While I feel comfortable trading the trends with my IRA. I felt more comfortable in 2008 being up 4% in my retirement account than being down 50%. That's just my personal preference. At one point, you'd lost all the money you'd made since 1997. At the lows in 2009, but you have to understand that you could have a 20, 30, 50% drawdown, but 20, 30 years from now, it's probably going to be triple.
Mm-hmm. And you mentioned something there. Having the risk management in place is just so key. And I don't know any trader, I really don't know any trader who hasn't blown up their account at least more than once learning how important risk management is, because I definitely know I've been there, and I've shared that several times before. But Steve, what would you consider the most important takeaway from the Ultimate Trading Risk Management Guide to leave for the audience out there, right? If Steve had to just give them one bit of wisdom, what would that be?
Yeah, start with your risk in mind. That's the very first thing. How much can I lose is your first question, whether you're buying Bitcoin, whether you're, going all in on long-term investments in an index in your IRA or 401k. The first question is understanding the risk in everything you're doing. If long-term capital management would have done that, they probably would not have blown up, even with Nobel laureates and some of the best mathematicians in the world, or Victor Niederhofer, who should have been a market wizard, ended up blowing up. I mean, blow-ups can happen to any hedge fund who does not respect risk, and it can definitely happen to any individual trader, not understanding the risk of ruin.
Oh, without a doubt. Well, Steve, I am so excited that I had you on today, and we were talking beforehand. We didn't get a chance to mention it, but if you guys are looking for a great daily show to put on in the background, this is something that me and Steve both do. In fact, we were talking and how we don't really care to turn on CNBC because we don't really care what their opinions are. We're just trading the markets, right? We are real traders trying to make real money, and sometimes it's just nice to have a community. Greg Gossett has an incredible YouTube channel out there. If you go check him out, just go into YouTube and type in Gossett Trading and Mentoring Live. He's on every single day, which I can't even keep up with. He's on every day between 2 and 3 p.m. Central Time. And, he goes through his portfolio. He talks about mindset. He talks about what he's looking at taking off and putting on, and really just a great place to go to get live coverage on a daily basis that, to me, is so much more valuable than anything you can find out there on the internet otherwise.
Yeah, I'm the same way, Chris. I've used Greg Gossett as my background when I'm executing my trades every day, the last hour of the day. It's really nice to have someone going through chart by chart and talking about signals and psychology and his trades and his thoughts versus just talking heads giving out opinions.
Absolutely. And Greg is such a really nice guy. I've had Greg on the podcast once before, and I'd love to have him back on again in the future. But he's quite the guy. He was an entrepreneur that was extremely successful, and now is a full-time trader. So if you guys are looking to put some noise on in the background, I guess is the way that I look at it. But it actually is good noise and something that you are interested in learning from on a daily basis. Definitely, highly would check out Greg's channel every day from 2 to 3 p.m. Central Time. And in fact, you may even see Steve and I there. I know Steve goes there on a frequent basis, and so do I. So look for us there in the chat too. Well, Steve, this has been great. I hope everybody got a really good sense of the ultimate trading risk management guide. And of course, like always, I'll put a link in the description down below so you can pick up your own copy. And while you're there, pick up all of Steve's books. I mean, this guy, he's written like 20 books already. He seems to know what he's doing.
Yeah, I have the benefit of financial independence, so I was fortunate to have the be able to trade in these markets for the last 20 plus years.
That I think that's so cool to hear somebody say it. They're fortunate enough to be able to trade in these markets because a lot of people can't, right? Who knows how many people are out there like legitimately don't have access to an account, don't have access to funds to trade. And it is a real privilege that we are able to do this. And you know what, people? Keep that privilege in mind. Don't go risking it all, unlimited leveraging your Robinhood accounts, okay? Don't do it.
That's funny. Yeah, that's a good segue, is the Robinhood glitch margin.
Yeah, I did an episode on that a couple days ago. I think I may have had my math wrong when I was doing it, but that's okay. I think I still got the point across that, you know what, don't do this. This is a highly dangerous financial situation that you don't want to find yourself in.
Great.
So, Steve, I was just going to say, thank you so much for coming on. And you guys make sure to go check out Steve's website, newtraderu.com. That way you can get started yourself learning from Steve. He's got lots of books, lots of courses, lots of everything you need to get up off the ground. And Steve, thank you so much for coming on again for today's podcast.
Thank you, Chris.
Hey, guys, thank you so much for tuning into today's How to Trade Stocks and Options podcast. If you don't mind, please leave a like, a rating, a review, and enable notifications. That way you never miss any of the tools, tips, and tricks that we upload every single week, and great conversations with people like Steve to help you trade faster and trade smarter. And I'll see you on the next episode.
Hey, did you realize that you could get the secret weapon that every investor needs right now to start changing your financial future for free? Yeah, that's right. Just head on over to triplestockprofits.com and download your free Triple Stock Profit System ebook today.
10MinuteStockTrader.com content is for information and educational purposes only. It is not, nor is it intended to be, trading or investment advice or recommendation that any security, futures contract, options contract, transaction, or other financial instrument or strategy is suitable for any person. Trading securities can involve high risk and the potential for total loss of any funds invested. 10MinuteStockTrader.com and Christopher Uhl, through its content, financial programming, or otherwise, does not provide investment or financial advice or make investment recommendations. Investment information provided may not be suitable for all investors and is provided without respect to the individual investors and audience's financial sophistication, financial situation, investing time horizon, or risk tolerance. 10MinuteStockTrader.com and Christopher Uhl are not in the business of trading securities trades, nor does it direct client commodity accounts or give commodity trading advice tailored to any particular client situation or investment objectives. 10MinuteStockTrader.com and Christopher Uhl are not licensed financial advisors, registered investment advisors, or registered broker-dealers. Stocks, options, futures options, and other financial instruments not included here involve risk and are not suitable for all investors. You alone are responsible for making your investment and financial trading decisions, and for evaluating the merits and risks associated with the use of any financial security and broker platform. For more information, please visit 10MinuteStockTrader.com/legal. Thanks for stopping by.